What's up everyone, it's Caddy with Money Vesting. So in this video, we are going to be talking about the big event that is upon us, and that is going to be Jerome Powell's testimony in front of the Congress, the US Senate, and the House of Financial Services. These are very long hourly events, so these can take 2 to 3 hours per day. So I will be live to cover this, and we'll be very much looking forward to what Jerome Powell has to say with respect to monetary policy. So in this video, I wanted to break down some of the key items, key things that we're going to be focusing on and what I want to hear from Jerome Powell in his testimony. And then, of course, we'll talk a little bit about how these events have played out in the past. So what I've done is compile data in an Excel spreadsheet going past 4 years, every time Jerome Powell has testified in front of the Congress, and how the markets have performed during those days, and what the average gain or loss is, the biggest gain, the biggest loss, and we'll kind of try to draw some conclusions to see and expect what the markets could do tomorrow once Jerome Powell starts talking at 10 a.m. Eastern. So hope you guys enjoy this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. If you're interested in joining us, there is a 16% discount and you'll get access to all the buy and sell alerts, options alerts, trade ideas, swing trading ideas, and of course private videos on our Patreon as well. So first things first, let's just dive right into it. This is going to be the calendar. So tomorrow, semi-annual monetary policy report to the Congress. We've got before the U.S. Senate Committee on Banking, Housing, and Urban Affairs on Tuesday, March 7th. At 10 a.m. Eastern, and then we've got Wednesday, March 8th at 10 a.m. Eastern with, again, semi-annual monetary policy report of the Congress before the U.S. House of Financial Services Committee. And this is where we are with interest rates. Now the market's pricing in a full 100 basis points hike by September of 2023, and then a cut before the year's over. So we're expecting a terminal rate of 5.5, close to 5.75%. Right now we're sitting, of course, at 4.5 to 4.75. So every increment, the market's expecting 25 basis points for 4 more times, getting up to 5.5 to 5.75%, and then one cut, and then consistent cuts in 2024 by coming down to about 4.5 to 4.75%, exactly where we're sitting now, up until July of 2024. This has been expanded a little bit, so now we do have the numbers sitting all the way out to July of 2024, so a little over a year. So we'll have a lot more data, a lot more work analysis to work with moving forward in terms of those interest rate projections. Now this right here is going to be my spreadsheet that I spent the last hour creating, pretty much going over exactly when Jerome Powell had his testimony in front of Congress. And again, you'll notice that these are consecutive days. So February 11th, 12th, June 16th, 17th, September 22nd, 23rd, because these are 2-day events, right? So one day, Jerome Powell is testifying in front of the Senate. Another day, he's testifying in front of the House of Financial Services Committee. And these are the daily SPX gains, or in other words, on the day of those testimonies, how the markets have performed. So for example, February 28th, the markets were down 1%. March 1st, 2018, we were down another 1.3%. So after compiling all of this data all the way till June 23rd, 2022 is what I know to be the last testimony in front of the Senate, the markets were up. And of course, we've got 2 question marks for tomorrow and on the 3rd. Actually, this is going to be the, 7th and the 8th. So I got to update that, March 7th and March 8th. So these are the 2 that are the big question marks, how the markets are going to perform. But as you'll notice that on average, the markets have been very uneventful and very flat. 0.06% is the gain on average on these days. And we've got the biggest gain at 1.9%. which happened back in 2020, June of 2020. Of course, the markets were rebounding from the COVID lows from back in March of 2020 back then. And the biggest loss happened, a 2.37% loss, and that happened back in 2020 as well. September 23rd, 2020. It goes to show how volatile the markets really were, as we saw the biggest gain and the biggest loss during Jerome Powell's testimony in front of the Congress, both back in 2020. And the median gain of 0.18%. So the bottom line is that this day is definitely leaned a little bit more towards the bullish side, meaning that we are pegged a little bit on the upside here. But the biggest loss obviously does suggest that there is volatility, there is also days during these types of binary events where the markets can really get rattled and pushed down with further downside. So that is something to keep in mind as well going into tomorrow. Now, going over to the S&P 500 and the NASDAQ before we jump into some of the specifics and what I'm going to be looking forward to in terms of the guidance and testimony from Jerome Powell. S&P 500 is bouncing off of that 200 simple moving average, so very, very nice momentum back up from these levels. And right now, as it stands, the sellers did step in intraday. So we had a red candle on a green day, definitely suggesting the momentum was very strong on the downside. And we've got that 300 simple SMA sitting at 4,100. So that's the level to really be paying attention to. If you do get a consistent breakout, then the next level really is going to be all the way up to 4,200 to as much as 4,330, right? So right now we've got a perfect resistance sitting right here for the S&P, in line with the 300 SMA, in line with that previous resistance. If you do get a breakout tomorrow, the next resistance to watch is going to be sitting roughly at around 4,200 to as much as 4,330 on the S&P 500. Talking about the NASDAQ, it's also getting a nice bounce back up from that 200 simple moving average. So we do have a little bit of a gap to fill on the upside. And the resistance sitting all the way up to 12,280. That's going to be in line with that 300 simple moving average and that previous resistance that we also got rejected at going back as far as September of 2022. Now, moving over to the most important piece, and that is going to be what to really pay attention to when it comes to Jerome Powell's testimony. Well, there's really four things, right? Four things that I'm going to be focusing on. Of course, they are going to be addressed. There's going to be extensive detailed analysis and research, and of course, everyone's going to be talking about it. Questions are going to be asked around these things. Number one, and the most important one, inflation, right? Inflation has what really put a dent in the US economy. It's driving markets lower. It's driving a lot of these premiums lower. Valuations have come down because of inflation. Even though inflation is a lagging indicator, it is a leading indicator for the Fed because they are data dependent. And whatever inflation does is what the Federal Reserve responds to, right? If inflation goes higher, the Federal Reserve is more hawkish. If inflation comes down, Federal Reserve is less hawkish, more dovish. So what inflation expectations are from Jerome Powell, very, very important. And what the future looks like with respect to inflation, of course, nobody knows. But what the expectation is from Jerome Powell and the Fed is going to be extremely important. And of course, we got the summary of economic projections coming out on March 22nd with the FOMC. The second thing is, of course, that's directly tied with inflation. That's interest rates, right? So interest rate expectations, what they look like. The Fed funds futures, as we just looked at, is expecting about 100 basis point hike in 2023, and then one cut, and then consistent cuts in 2024. So any line of questioning, any line of analysis and answers from Jerome Powell around that, what's going to be that terminal rate? How soon can we expect to pivot or pause or cut? How higher are we going? How long are we going to stay up there? All those are big questions for the markets, which we really need the answers to. So any type of analysis or any type of color around that is going to be very important. Number three, GDP, right? That's the gross domestic product. That's the economic growth for the U.S. 2022 does seem like we're going to go 2.1%. We're going to get that third and final estimate at the end of March. So that's going to be very important. We'll see if the economy actually does enter a recession, and any type of questioning around a recession or any type of questioning around retail sales, consumer spending, the debt levels, the credit markets, yield curves, very, very important. The inversion of the yield curves, all those, any type of color around that, extremely important as well. And last but not least, we've got employment, right? The labor market. Labor market's still super tight. I've done several videos on the labor market talking about that JOLTS ratio, JOLTS to unemployed persons ratio, still trading at almost 2. So there's 2 vacancies for every 1% unemployed. That's still pretty high. That's still pretty tight. And of course, any type of analysis around that, how high do they see unemployment rate going? What's going to be the big causes of this unemployment spike? And if so, how high are we going to go? What the Federal Reserve is going to do if and when unemployment starts to go back higher? Because that's the dilemma between that dual mandate, is that if unemployment starts to go back up and inflation stays sticky around stagflation type environment, what is the Federal Reserve going to do? That's the real question. Of course, they're going to dodge this question by saying, hey, we don't expect a lot of economic pain. We expect to have a soft landing. We expect to have unemployment relatively stable and low, while bringing inflation down. But Jerome Powell, what if that doesn't happen? You got to prepare. You got to have a plan B, right? What if unemployment starts to tick up as inflation also stays higher? What is going to be the thought process and the guidance for monetary policy moving forward? That's the big question there. So I hope you guys enjoyed this video, found it helpful. Get ready. Big 2 days coming up for the market and for the economy. So let me know your comments down below if you have any thoughts, explanations, analysis, research down in the comment section below. As always, happy investing, and I'll see you all in the next video.